This is the current stock market condition. Since the pandemic started, we have taken out a lot of these fundamental blocks, and the Fed's way of supporting it is to print all these dollar bills and put them in place of the pillars. As more and more of these blocks gets knocked out, we'll get the ultimate crash. Jenga! Being a YouTuber, we need to find creative ways to deliver the message. So here's a bingo card. The objective is to get a straight line in whichever direction, either horizontally, vertically, or diagonally. There's a free square in the middle since we already had the first crash back in March. Then we have 24 other points that can possibly trigger the next crash. There are a couple of main themes that encompasses all these 24 points. The economics, the election, the virus, and China. And many of these are intertwined between the 4 themes. Let's get to it. I'll run through these quickly to get the macro picture and elaborate on the keys in a later video. Number 1, state shutdown round 2. As we all know, the US have been ramping up the reopening for the past couple of weeks. But in the recent days, we see an increase in the virus count. And Apple decides to shut down 11 stores over 4 states. There may be more to come. Number 2, Black Lives Matter protests. We see this happening over every weekend now. There's a conspiracy that the US is back to Hong Kong protests. So what do you think that China will do to the USA right now? Number 3, the Trump rally in Tulsa fails. In this photo of the rally, we see that no one has a social distancing protocol or wearing any face masks. So the spread may spike in the upcoming weeks. Number 4, the real second wave. In 1918, the Spanish flu, they first occurred in March where it hits the elderly. A mutated second wave came between August and October to hit the rest of the population. Number 5, a vaccine or treatment doesn't come at the end of the year, as Trump says. This is a strategy called the moving target. They've used that for the virus count already. I think early on they projected 50,000 deaths, but then they benchmarked themselves to 2 million. So as it progresses, right now it's about 120,000. It's still far away from the benchmark of 2 million. They're essentially doing the same thing for the vaccine dates. So the benchmark from the health experts is 2 years, but Trump is saying 6 months. So as we progress, they can just keep moving the goalposts. And it's fine, it's a typical overpromise and underdeliver. Number 6, market optimism. It's where all news is good news. There was a stat a couple weeks ago that says that employment has jumped 15%. But it's all relative because we came down 80%. Let's say we started with 100, we came down 80% to 20, and then it jumped 15%. So 15% of 20 is only 3, and that's a total of 23%. We're still down 77%, and the numbers can be manipulated however you want. It's like the glass is a quarter full or 3/4 empty. There's also a repeated slogan, don't fight the Fed. Kramer mentioned it, and Trump kept emphasizing the record stock market and how it's better than a V bounce. So think about it. What is better than a V? Better than a V is pretty much going straight up. And as we all know, gravity is always in play. So what goes up must come back down. So if it goes up in a straight line, it comes back down in a straight line, and it might flatten out. So it's an L-shaped economy. Number 7, the markets are breaking new highs. Nasdaq over 10,000, Tesla over 1,000. This is what you call an anchoring effect. So where we kind of benchmark ourselves to those points, and anywhere under is considered cheap. This causes FOMO, and the rocket is taking off, and we don't want to miss out, we just want to catch on. Number 8, the new stay-at-home gamblers. If we look at the top 50 traded stocks in the Robinhood app, we see that many of them are penny stocks. Stocks like Hertz or Urban One jumped 10x within a month. Number 9, YouTubers counting money. I've seen a lot of videos recently showing the portfolio over the past 3 months and how much they made. There's this one instance, the guy has $1 million in Tesla, and he projects that over the next 10 years, it'll become 10 million. How much more greed could there be? Number 10, disappointing earnings numbers for Q2, Q3, Q4. This will show that the economy wouldn't be the perfect V-bounce, like the rally we've had. Number 11, companies cutting dividends beyond Q1. So there are a lot of dividend investors out there, and many of the dividend stocks has fallen in price. So if we move forward and the dividend starts cutting as well, then what are you left with? What are the principles when the stock price and the dividends is falling at the same time? Number 12, the free trading platform Weibo. As I mentioned in this video, there's a lot to be skeptical about, and a lot of people could get hurt. Number 13, the jobs bounce back is weaker than expected. We know in this new economy, a lot of jobs won't be needed. That's either from automation or effectiveness. I still remember from my engineering job, I learned the 80-20 Pareto principle, where only 20% of the employees does 80% of the work. And that's how employees like me can be trading stocks, running businesses, and holding a corporate job. I'm sorry. Number 14, bankruptcies escalates. We've seen bankruptcy filings from 24 Hour Fitness, JCPenney, Hertz, but there is a lot more to come. Right now the PPP is kind of patching this hole, but as those funds runs out, more and more is going to come to the surface. It's a really hard time for the small businesses. I've talked to many business owners and they say that they're coming back to work. And that's not a good sense because they don't have enough money to hire employees. They're trying to keep the cost down in any way possible. Number 15, the goats aren't buying. So the definition of a goat is the greatest of all time. Warren Buffett hasn't been buying any stocks during the crash, and Ray Dalio pretty much declared a depression. Number 16, the quadruple witching date is when the options, futures, and all the derivative markets expire in the same date. The last one was March 20th, and Ray had a huge bull run for the past 3 months. The second one is in June 19th. So what will happen for the next 3 months? Number 17, the debt crunch. The mortgage, student loans, and car loans has all been deferred or subsidized for the past couple months. The Fed stimulus has to end sometime. Number 18, US-China tensions. First phase of the trade deal will be breached. There's no way China is going to meet the buying targets no matter what they're saying. And right now they're under a cold war where they're not talking at all. What do you think China is doing? Are they just going to lay back and do nothing? Or are they waiting for the perfect time to strike? Number 18, MATLAB. A week ago, the US have suspended the China universities from using the technology, and I've used MATLAB. It's a software that solves really complex math problems. The US have also clamped down on the Huawei 5G tech. Number 20, the Beijing coronavirus at the fish market. They canceled more than 1,000 flights and claims that the virus is under control. Doesn't it seem like the same Wuhan case study back in January when they shut down the whole city over 100 deaths? Fool me once, shame on you. Fool me twice, shame on me. Number 21, Chinese companies leaving the Nasdaq. Over the past year, these 3 companies have been dual listing on the Hong Kong exchange. Alibaba, JD, NetEase, and they combine for over $1 trillion in market cap. Are they pulling all the China companies back to the Hong Kong exchange and pulling the plug on the Nasdaq? Number 22, crude oil crash 2.0. Anything happened between Russia, Saudi Arabia, and US? Since we already seen negative oil prices, this time won't be as bad. Number 23, the Major League sporting seasons cancels. As the plan starts to ramp up in the NBA, NFL, MLB, and NHL, we already see many cases in the athletes. In the NBA, for instance, they plan to play under a bubble and have all the players wear a ring that checks their temperature. As we already know, this virus may be asymptomatic. Number 24, the election between Trump and Biden. In my opinion, it doesn't matter who wins because this rally rocket has gone up way too much and the fuel is running out. So both of them has to catch it on the way down. These are the issues that I've found, but it's usually something in the left field that no one can see that really drives the next crash. Back in March, it was a crude oil crash that really fueled it. That completes a market crash bingo board. Beautiful, isn't it? Am I missing anything? Comment down below and let me know what you think the critical path is. I'm not saying to sell all the stocks and short the market, but I'm just saying there's a fire on the 3rd floor and we're on the 30th. In the next video, I'll show you 24 ways to short the market, either to hedge your position or to make a play if things go doom and gloom. Again, if you appreciated my Jenga skills or found any value in the video, consider dropping a like and subscribing. That really helps the growth of the channel. Thanks for watching and I'll see you in the next one.